Welcome back. Once again, it's Yakov Hershkowitz, licensed mortgage loan originator with Yale Capital, NMLS ID 1017498. Today we're going to elaborate and talk about the second C that you may need in order to qualify and successfully get your mortgage approved with a lender. So first and foremost, many would-be home buyers think that they need as much as 20% of the purchase price in order to buy a home. So in order to buy a home for $500,000, they think that they need $100,000 to put down towards the down payment as well. In addition to that, they'll need the closing costs, which is typically ranging anywhere between 3 and 6%, depending on the county, jurisdiction, applicable taxes. We're not going to discuss that part for now. However, the truth is that you may only need as little as 3% as well as 3.5%, respectively 5%, and with the VA you may need as little as 0% in order to purchase your home. So that may lift a big burden from you, and that may have kept you back from entering the home buyer's market. Now, the assets that you are going to use and utilize towards a down payment and closing costs, whether it's going to be 3%, 5%, 20%, and so forth, those assets need to be sourced. So what does that mean? It needs to be sourced. It doesn't typically have to be your own assets. It can be gift funds from qualified relatives. It can be grants, qualified grants and recognized grants. If the grants have repayable period or amount, then obviously we're going to utilize that into your DTI or debt to income calculations when determining if you qualify for the loan. If you're using your own funds, we're going to ask you typically for 1 or 2 months bank statements. Now, any assets that are deposited other than gifts, other than income related, that exceeds 10% of your income will be challenged and questioned by an underwriter. Now, if you are transferring assets between your accounts, we're going to want to see the root source of these assets. So we're going to go back and see which statement it came from, and we're going to need a 1-month bank statement from that statement. However, we don't go back more than 2 months, so we're not looking back 3 or 4 months. So if you had large deposits 3 or 4 months before you applied for the loan, that's okay. We're not going to see it, we're not going to question it. But we want you to keep your bank statements clean and not have a lot of deposits, transactions. That's going to be a problem. Sourcing it and maybe disqualified may delay the process. So try to keep your bank statements clean for at least 2 months before you apply for the loan. I hope this helps you with some information about qualifying and getting approved for your loan with the lender you're going to apply with. Thanks for watching. Once again, it's Yakov with Yale Capital, NMLS ID 1017498. Have a great day.